Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, traders. It is 7:52 a.m. Chicago time. I'm actually not in Chicago. I'm on Eastern time today, but we're doing this special week this week where we come at you every day. I'm on a remote station, so things may not work as wonderfully as they do out of my office, although that's always got its pitfalls. This is episode number 2722. It is the 9th of December 2025. It is Tuesday, the day before the FOMC rate decision. So that's where we are today. Let's jump into the Convergent Trading pre-market summary sheet. The overall stance, as you can see on risk assets, is mixed. We're seeing basically almost unchanged on the S&P. The NASDAQ is one rotation away from being unchanged. Same with the Russell, same with the Dow. So overall, just a mixed kind of environment. The profile for the S&P is mainly balanced. If you look at the RN and RVOL, again, they continue to be very limited. I mean, it is December. There isn't very much to price in here. There will be tomorrow with the FOMC, but right now there isn't much kind of to chase, so to speak. Funds don't have to adjust their positions too dramatically. The big movers again, silver and copper. Copper is just a big piece. Copper was hoarded through the tariff discussion. A lot of copper was brought into the U.S. and is hoarded, and there's sort of an oversupply of it right now. But copper generally as a commodity tends to be a nice leading indicator for manufacturing, and so is important to monitor. Cryptos aren't doing much. We're holding steady at 90,000 in Bitcoin and 3,100 in ETH. The S&P, again, as I said, the profile is balanced. We're seeing the point of control and DGPs at the same at very close prices, actually, not the same. VWAP is close, mid is just below, and we are just we've tested up and down. We've done nothing really. The volume's 123,800 contracts. Inventory's 55% long, not that off balance. So everything is pretty much in line. Let's take a look at what was expected yesterday. Yesterday, we hovered above this LIS that I put on the screen for you at 68.80. And the idea here is that we had a weakish high versus the low. And so the expectation is we're likely to poke the high and just grind up. That was the primary expectation. I really expected it to test the prior week's high. The secondary is poke that overnight high and then turn over to go visit the settlement price down below. Since we're opening in range, we have that historical probability of around 74-75% to test the prior close of the prior settle, and that was scenario 2. I'm going to make a better effort today at separating the colors there because I know it's confusing with the two overlapping yellow lines. The market actually didn't do either. It basically opened in what looked like a bit of a drive. So let's look at that on the on the market profile chart. Shows it best, of course. So let's expand this quite a bit. And you could see here we had an open that is right, when I see this kind of thing, I see the open right near the high, right near the IB high, where the open basically makes a 1 or 2 tick test up before it falls. This is an early indication and a money saver. because it tells us that we need to just stay away from buying in this situation. For that to be canceled, we would want to see it hold an important area and then turn around and get through the open and go the other way, nullifying this seller control. It did not do that yesterday at all. It basically, sellers maintained control all the way down through the 68.50 and beyond. And then from there it was just a balance, and it just sat sideways. So it made a bit of a recovery on the close. You could see that it settled a little bit higher, 68.44. Wait, where did it settle? Let's see. It settled at, where's my settlement price? It settled at around, I don't know. Does anybody have settlement here? My chart's not showing it, but it's pretty close to where we are now, 68.50-ish, I guess, because we're almost unchanged. So it made a bit of a recovery, and this leaves us in a pretty precarious area. So again, that zone from yesterday is above us, was left above us, and we fell below, and we ended up ending the one-time framing up that we've had. Look at this. I have a super powerful laptop with tons of RAM, and it just cannot keep up when I broadcast from here. So you see these one-time framing up was broken, and so today we enter this neutral territory. So let me pull in a little bit more volume in this region. So let's go from this rally day, balance, test down, and then the drive up. And you could see that the bulk of the volume, full session volume, is right in here, and that's where we find ourselves. So overall today, versus yesterday the expectation is this thing is likely to push that high and grind up and recover that 69.12, 69.10 area. Did not happen. Market didn't have the rigor to hold on to those higher prices, and now we find ourselves in this big balance zone. And so today looks pretty choppy to me. We're falling below the point of control. Here's the point of control. Here's VWAP is right there, and the mid is right here, and we are falling below it, and we have a bit of an excess low below the 68.50. So a revisit here of the 68.50 and continued pressure into the open below there starts to make me think that we're starting to make our way down into the 68.15 to 6800 zone, this area down here. Okay, it did almost hold our stock zone. Balance was on this other stock zone, but I got to tell you, it's very choppy. I'm finding it not very orderly. It's very scalpish in behavior, and I expect that to continue through today. Reminder that tomorrow is FOMC, and it's going to have an impact, right? It's tough it's tough for program managers to take a strong position ahead of FOMC. They're going to need to wait to see how the coin is flipped on whether or not we'll cut 25 basis points, and then money can be committed or money can be withdrawn depending on what the outlook is. And so today is a good day to keep the powder dry, to manage risk, to catch up on other things, and to be very, very, very selective on the type of setups that are showing up. So this is not, I don't believe today is a good day to kind of let your trades fluff around and still have recovery potential. I think you just get yourself in trouble early, and it just becomes a bit of a pardon the term, shit show. Okay, so what are the scenarios? So we still have range statistics and other scenarios to deal with, and as a result, hang on, this thing is really slow. as a result, we're still going to attain certain historical probabilities. So let's look at those. The way this is going right now, given the fact that we had a battle here and sellers lost. I didn't mark it this morning, but this region here, let's mark it, becomes an important reference right in here. Oh, we tested it already. So how am I marking these red areas that you see here? Um, Basically, I'm looking at where the energy came from for each move, and I'm projecting that forward. So this morning, expecting, sorry, this is not cooperating with me, it's just choppy from my side. Expecting a test of that zone, I'm expecting it to come back to the overnight point of control, take out the prior settlement, 55.75, and then to consolidate in here today. It's very, very likely to be a rest day today to the upside. Okay. Again, nobody's going to, I seriously doubt anybody's going to commit to anything. The secondary is it holds that excess low from earlier in the overnight session, pushes back up to the overnight point of control, comes back in, and then later in the session gives that up since we look like we're starting the one-time frame down. And then now we're starting to cover risk and head towards the 15s, although that's a little bit too much range for this kind of environment. Wow, that number 2 with a circle was terrible. Let's try it again. So that's it. To the upside, expecting it to be embattled, expecting it to have a hard time coming back in. But to the downside, I expect it to flow a little bit easier. Again, there's a lot of uncertainty. We don't have CPI, which was supposed to come out tomorrow. We don't have non-farm payrolls from last Friday, the first Friday of the month. At least put them out this Friday. We don't have GDP, and this leaves a big gaping hole in what we've got. So this is an issue for the market. So I'm not too shy about the short side as a result. Remember, the market's default reaction when there is risk is to cover risk first. If you're a professional money manager, your fiduciary duty is to cover risk first, and that's what's likely to happen. So here we've got crude. Crude has been in a beautiful upward channel like this. It busted out of there yesterday. Yesterday had an open test drive down, And what did it test? It tested the prior range, tested the prior day's excess, could not find buyers to take it back through the single prints and back into balance. And so sellers came in and drove it down, leaving single prints, which, by the way, for those people, for those members of Convergent, I did not mark the single print range. That was accidental. I sent the cloud levels without it. I'll update it. But you could see in the overnight session, it tried to recover into yesterday's kind of the bulk of where the trading has happened. It's not able to. Suspecting that crude is likely to push down. So what is happening here? Again, this is a fundamental product. This is a physical product. So it's susceptible to sovereign noise. But what I'm looking for here is it's very likely to push lower, come back in, and hold steady. Again, FOMC dictates how much of this, how much of this commodity we consume over the next few months, how much stimulation there is. So this has crude is likely to respond to whatever the FOMC decides as well. The secondary scenario is it pushes down. Now it's cleared a couple of lows. It pushes down to what is a clear spike low right down in here. It pushes down in there and then finds buyers, consolidates, and then makes its way back to our MC point of control and yesterday's point of control in this region. That's scenario 2. If it does that, the condition is likely to be neutral into the FOMC, and this gives a little bit of a discounted rate for late crude buyers to step in. Remember, a couple things I want to remind you here about my approach. The market is an auction. Wherever there are prices, doesn't matter what it is, wherever there are prices and there's enough volume, you're dealing with an auction, whether it's housing, cars, computers, Black Friday sales, whatever. What is a Black Friday sale? And why is it called Black Friday? Black Friday it used to be recognized in the retail space as the time of year when retailers go solidly in the black, meaning that's when they make money. How do they stimulate those kinds of sales? They bring down the price to stimulate buyers. They don't bring down the price so more sellers can come in. They bring down price to stimulate buying. The market, the ES, NQ, CL, YM, whatever, that's the same mechanism. Price is advertised lower to see if there's any buyer interest. If there is buyer interest and it holds, and that's what we're looking for, we're looking to detect that. If there is buyer interest and it shows up in the form of excess lows or spikes or V bottoms or whatever you want to call it, if it does hold, then we're looking for the next most traded area as the test area. And that's what scenario 2 is. Test down to see if those buyers from last week are still there. And if they are, they come right back in and buy up into the MC point of control and yesterday's point of control. That's the expectation, and that helps me detect what's happening, and it helps me hold trades to their full fruition as opposed to getting in and getting shaken out. It's easy enough to execute a trade. It's hard to have conviction or maintain conviction after putting the trade on because your plan is not clear or you're not confident. And it's even harder to hold that trade to its full depth. So approaching things as an auction and have it looking at the bigger map and so on is important. The execution, of course, happens on the order flow chart and it happens on the trigger chart, but the overall plan, the confidence that I have in the market comes from the market profile chart, which is a 30-minute base chart, or the intraday chart, which is a volume profile in 30-minute base chart. And of course, the homework involves weeklies, dailies, 4-hour charts, and so on and so forth. So that's the process that we're dealing with here. And so that if we don't see the behavior that we're expecting, we know how to respond in terms of how we trade it. Okay, does that make sense to you all? Hopefully it does. Okay, we've run over our time. I'm going to let you go. Good luck today, and I'll catch you tomorrow. We'll review what actually happened.